Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Mengniu Dairy Company Limited annual report. China Mengniu Dairy Company Limited offers a diverse range of businesses and services under its Mengniu brand. The company's primary focus lies in the manufacture and distribution of dairy products across various segments. These include liquid milk business, which encompasses ultra-high temperature milk, milk beverages, yogurt and fresh milk, ice cream business, responsible for producing and distributing dairy-based ice cream, and cheese business, involved in the manufacture and distribution of cheese. In addition to these core businesses, Mengniu also operates in other segments such as milk formula business, where it manufactures and distributes milk powder. The company's other segment is engaged in various activities, including the production of raw materials for daily products, trading business, organic food and formula products for babies and toddlers, and commercial factoring and financing guarantee services. This comprehensive portfolio showcases Mengniu's commitment to catering to a wide range of consumer needs across different age groups and product categories. China Mengniu Dairy Company Limited market capitalization of 68 billion is significantly larger than the average industry peer of roughly 3 billion. This shows that China Mengniu Dairy Company Limited holds a significant advantage in their industry. China Mengniu Dairy Company Limited trades at a higher price-to-earnings ratio of 39 times and a higher price-to-book ratio of 1.48 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 55% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 3.36%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be summarized into two main categories: revenue growth drivers and revenue decline drivers. Revenue growth drivers are the key factors that contribute to an increase in revenue. These include a diversified business structure, key technology breakthroughs, international market coverage expansion, supply-demand balance management, R&D investment, brand leadership, and product innovation. Additionally, the company's ability to adapt to changing consumer needs, launch new products, and expand into high-growth channels has also contributed to its revenue growth. Furthermore, the company's focus on nutrition and health, precision nutrition trends, and innovative formulation of products have also driven revenue growth. The successful partnership with China Central Television for experiential marketing campaigns and breakthroughs in professional nutrition through R&D innovation have also contributed to the company's revenue growth. On the other hand, revenue decline drivers are the factors that contribute to a decrease in revenue. These include cyclical overcapacity on the supply side, persistent weakness in consumer demand, and volume decline in China's infant formula industry due to demographic shifts and rising health awareness. The company's financial performance is a key indicator of its overall health and stability. A positive operating cash flow is a crucial metric that suggests the company is generating sufficient funds to cover its operational expenses. In this case, the company has consistently reported a net cash inflow from operating activities of RMB 8,750.5 million on both page 1 and page 39 of the extracted summaries. This indicates a strong ability to generate cash from its core business operations, which is a positive sign for investors and stakeholders. The consistency in reporting also suggests that this trend is likely to continue, providing a stable financial foundation for the company's future growth and development. The company's debt level and interest expenses have undergone significant changes over the past year. A notable decrease in total debt is observed, with a reduction of RMB 6,491,046, 30.7%, from 2024 to 2025. This decline translates to a decrease in total debt from RMB 34,637.2 million to RMB 25,388.7 million. Furthermore, the company's interest expenses have also seen a substantial drop. Total finance costs decreased by RMB 496,938,000, 33.9%, resulting in a reduction of finance costs from RMB 1,467.8 million to RMB 970.8 million. These changes indicate that the company has successfully managed its debt and interest expenses, leading to improved financial health. The company's performance across various segments and regions has been mixed. On the positive side, the liquid milk business has shown strong results, with notable performances from the adult segment, particularly the Yurui brand, which excelled in this area. Middle-aged and elderly consumers also favored Mengniu's milk powder, securing the top market share. The professional nutrition segments, including glycemic control and weight management products such as Anteng Shield and Sasa-Daily probiotic products, have performed well. Additionally, the company has seen success in the overseas infant formula market, with Bellamy's Organic delivering double-digit growth in Australia and significant sales increases in Southeast Asia. Domestic enterprise Sinara Biotechnology in core product regions have also shown positive results. China as a whole has been a strong performer for the company. However, not all segments have fared well. The ice cream business has struggled, with losses reported in this area. The milk powder business has also underperformed, resulting in a significant loss of $4,637,711 in segment results. Other segments have also seen poor performance, with segment revenue exceeding segment results by RMB 3,306,233 and RMB -133,567 respectively. Management's outlook for the company is focused on long-term growth and sustainability. The 3-year shareholder return plan aims to increase dividends per share and maintain a consistent share repurchase cadence. This indicates that the company is committed to rewarding its shareholders while also investing in its future. In addition, management is prioritizing sustainable development through its green strategy. This involves dedicated task forces working on green packaging, responsible procurement, and sustainable water management. By advancing this strategy, the company is demonstrating its commitment to reducing its environmental impact and promoting a more sustainable business model. Overall, these initiatives suggest that the company is positioning itself for long-term success, while also addressing key social and environmental concerns. The company's financial activities for the given period are notable in 2 key areas. Firstly, it has a history of paying dividends to its shareholders. This is evident from the total dividends paid, which amount to RMB 12,017 million. Furthermore, the company declared and paid out RMB 991,229 during the year, demonstrating its commitment to rewarding investors through dividend payments. In addition to dividend payments, the company has also engaged in share buybacks. This is confirmed on page 38 of the document, indicating that the company has indeed purchased back shares from the market. Concerns about inventory buildup and supply chain disruption. There are valid concerns regarding the accumulation of inventory levels. A specific instance is highlighted in the document, where it is mentioned that there has been a write-down of inventories to their net realizable value on page 14. This indicates an issue with excess stock, which can have significant financial implications for businesses. The presence of such concerns suggests potential disruptions in supply chains. When inventory levels become too high, it can lead to difficulties in managing and utilizing resources efficiently. This may result in wasted resources, reduced productivity, and ultimately decreased competitiveness in the market. That concludes the financial summary for China Mengniu Dairy Company Limited. Feel free to comment below, and I will be happy to answer them when possible.